The Bank of England kept interest rates at a 16-year high on Thursday, but Governor Andrew Bailey said Britain's economy is on the right track for future rate cuts. Policymakers voted 8-1 to keep borrowing costs at 5.25%. Two officials who had previously called for higher rates dropped their vote for a hike. Bailey said there had been encouraging signs that inflation is coming down, but he also said the central bank needed more certainty price pressures in the economy were fully under control. The decision was similar to the US Federal Reserve's announcement on Wednesday. The Fed stated it was on track for 3 interest rate cuts this year. In the Eurozone, the European Central Bank has tried to cool talk about a run of rate cuts. It comes as investors increasingly consider the fight against global inflation to have been won. Data on Wednesday showed UK consumer price growth fell to its lowest in almost 2.5 years, but the Bank of England argued key indicators of the persistence of inflation were still elevated. It also said Britain's labour market remained relatively tight. In February, UK inflation was still the highest in the group of 7 at 3.4%. Most analysts and investors have said they think the bank will only cut rates for the first time in the third quarter, most likely at its August meeting. But financial markets earlier on Thursday put heavy bets on a first cut in June.